Hello everyone, welcome to ACE Online and welcome to SSC JE Complete Revision Series. As part of this series, we are going to see the economy revision, right? So through the MCQs, of course, we have completed many subjects as well before. Similarly, we will be take up the economy as well. And if you have any doubts, please do let me know in the comment section so that I can take your doubts as well, right? Yeah. Without any delay, let's start with the first MCQ. We will have chapter wise, we will take the MCQs in a chapter wise manner from starting from the basics to the last. So you will be covering most of the chapters, if not everything. Fine, in this revision series. First question: which of the following is the total value of net national product at the production point? Anyone? Which of the following is the total value of net national product NNP at the production point? Gross national product at factor cost, gross national product at market price, net national product at factor cost, net national product at market price, right? So before that, before answering, let's see briefly the revision, the concept part, and then we will come to this particular question, right? So first you need to know that in our economy, in our means here India or any other country you can take. So let's say this is our Indian boundaries, right? Usually you can draw the map also, but understand. So here in every day we are producing certain amount of value. For example, I am manufacturing a pen today. It costs 10 rupees. So we are adding an extra value into our Indian economy. For example, we have started with the zero amount. Till date, we don't have any country. Today itself, our country has started. So today, we have added 100 crores total. Tomorrow, we will add 100 crores. So if you add on every day in the year, the total, how much value you have added in the country per year, it is called as gross domestic product, right? Gross domestic product, that is GDP, gross domestic product. So the GDP of a country means in 1 year how much we have produced or value added in the whole boundary of India. So this Indian boundaries may consist of Indians or maybe the foreigners also. So there is no discrimination. Any person who has produced, whether it is of Indian or maybe American or maybe UK, any person, any company who are generating income in our Indian borders will be added and combined it for 1 year, and we will know the total amount of value added in terms of gross domestic product. That is called the GDP. For example, 10 pens were produced in 1 year. So 10 tens are 100 rupees we have added. Then chappals, for example, 10 sets been added 100 rupees and 1000. And you can take watches, 10 watches 200 rupees, so 2000. So adding all this value, we have a number of goods, thousands of goods. All the goods multiplied by their prices. Together, value adding all the things, you will get the GDP. So that is called as the GDP, right? Now we know the GDP, we understood the concept of GDP. If you have followed this particular a minute that we have discussed, it is called as GDP. Now GDP can be calculated at the starting stage at the producer level. GDP can also calculate at the consumer level. So here you need to know 3 important things before knowing the GDP calculation at various stages. First one is production taxes. Production taxes, then product taxes, right? So production taxes as well as product taxes we have. Now what is production taxes? Production taxes means the amount. For example, I am starting a company A. Even before producing any good, I have started company, but I need to pay certain money to the government in terms of land tax, in terms of any processing fee, right? In terms of any registration fee. So whatever the taxes that I am paying, even before producing the goods, those are called as production taxes. Production taxes. Now, the product taxes. Product taxes means after producing goods. For example, 10 pens I have produced. After paying production taxes, registration and all, now I have produced 10 pens. In this 10 pens, for each pen, I need to pay some tax. For each pen, I need to pay some tax also for the government. So those taxes which are paid based on the number of goods that I have produced, number of goods or services that I have produced, is called as product taxes, right? So this is the very, very thin margin that you need to remember. Production taxes are paid even before producing the goods, and product taxes are after the producing the number of goods based on how many goods I produced. So these are the production taxes. Now the value addition I have done is of 10 rupees, right? So it is of 10 rupees. Now each pen multiplied by 10 rupees, so 100 rupees plus the production taxes. So if understand this very clearly, GDP can be calculated at a factor cost. I will explain you what is factor cost and all. At factor cost, GDP at basic prices, GDP at market prices. This is also very, very important, at market prices. So GDP, I have explained you the total amount of value of goods and services I produced in the economy. Now GDP at factor cost means without any production tax or product tax. For example, 10 pens I have produced as a company, and the cost that I incurred was 10 rupees per pen. So 100 rupees that I produced is called as GDP at factor cost. Now if I include the production taxes, which means before producing goods I have paid certain money. And also one more important thing here you need to remember, government then and there give certain returns, right, subsidies to promote the production of goods in Indian boundaries. So government will encourage and they will give some subsidies. So production subsidies will also be given, product subsidies are also will be given, right? So for example, I have paid 10 rupees in terms of production tax, 5 rupees they will give back because you are generating GDP in our country. So very good, we are giving you 5 rupees back. So here GDP at factor cost does not include any taxes, including production or product. So it is the bare amount that I incurred in producing the pen, right? So that is called as the GDP at factor cost. Now in terms of GDP at basic prices, this 100 rupees plus production taxes. I hope this is clear. So GDP at basic price means the total GDP, that is 100 rupees plus production taxes, that is called as GDP at basic price. And GDP at market price means, of course, subsidies will also be removed, production taxes which they are paying, and they are getting some returns also. So 100 rupees plus production taxes minus subsidies which they got back. So that is called as GDP at basic price. And GDP at market price means the 100 rupees plus production taxes plus product taxes that the company is paying, plus product taxes minus production subsidies, what government is giving subsidies in terms of production process, right, because of starting a company. And also government gives certain subsidies for the goods also. For example, you are producing certain important good like lead ion batteries and all. So because country need it, so they are also giving some rebates. So minus production subsidies minus product subsidies. If we remove the subsidies also, then it is called as GDP at market price. So this is the most important calculation that we do. Right? So GDP at market price means at the end, by including all the product taxes and production taxes as well, by removing subsidies given. So this is the GDP at market price. Now if you understand this, there is one more important tax. GDP means total value produced. Net domestic product, NDP, means the GDP. We have started this year, we have taken this year as an example, 0th year, right? Next year, there is some goods which are already existing. For example, I have produced a mission last year, and the same mission I am using for the next year production as well, because it have a lifespan of 10 years. So here, in the terms of the total GDP of next year, I am removing the depreciation. Depreciation means the used value, whatever the redundance that the quality has depreciated of that particular machine. So NDP is equal to GDP minus depreciation. So if you minus depreciation of that particular goods which were already produced last year, then we get the net domestic product. So this is all about the GDP and NDP. Now check the question. So this should be the clear. So they are asking which of the following is total value of net national product, they are saying. Net national product. Okay, one more important thing here to be understood. We have missed this particular thing. So GDP we have seen, if you have followed previous thing that we have discussed, GDP is within our Indian boundaries. It can be Indian, it can be USA, it can be United Kingdom, any companies. But this is called as the GDP. GDP. So all the individuals within country. Now, the gross national product means, this is GDP, gross national product means whoever the Indians alone producing the, adding the value. So we are not including any foreigners, right? We are including only the Indians. The total value of goods produced by Indian citizens is called as gross national product. And these Indians may be also located in USA, UK, Pakistan, many countries, right? Indians will be there in companies. Infosys have a company in London, UK. So we are adding all the Indians who are present in India and are also present in other countries. So this all value added by Indian citizens is called as gross national product, right? So this is a very important point. Now let's understand, they are asking is the total value of net national product at production point, they are asking. At the production point. So we have discussed three things: GDP at factor cost, GDP at basic prices, GDP at market price. So GDP at factor cost means the bare value without any taxes. Now you can consider. So they are asking NNP at production point, That means it is at the factor cost. So even before producing any of the goods or paying taxes, that is called as production point. So this is called as factor point. So the net national product is nothing but net national product at a factor cost. So at factor cost, we does not have anything, right? So excluding the taxes, subsidies, all these things, bare amount of the pen. So answer is C. So this is very important. I could have directly told the answer, but you won't be able to understand, right? So you need to understand the concept, then only you will be able to understand. Now they are asking about net national product. So gross national product is not important, not relevant at all. Gross national products are not relevant for us. They are asking about the national. So the country that national Indian citizens has produced. It is not at the market price because it is not at the selling level. It is at the production point. So that's why factor cost is the correct answer. So answer is C. Next question. So this is a very important, that's why I have discussed. Any type of questions can be possible. So we have discussed in a very detailed manner, right? If you have any doubts, please do let me know. Next question. A closed economy is an economy in which? So closed economy means a country economy which is closed the borders. So we are not allowing anyone, right? So closed economy, it is taking all the activities within India itself. We are not allowing any imports, exports, something external markets. So what is this closed economy means? They are asking. The money supply is fully controlled. So money supply in the market is completely under the hands of government, they are saying. Deficit financing takes place. So that means whenever there is a lack of money for the government, they are taking money from somewhere else. Only exports takes place. So only we send goods, but we are not allowing goods to enter into India. So that is a closed economy, they are saying. Neither exports or imports takes place. So we won't send our goods to other countries, and we are also not allowing other country goods to enter into India. So what is the answer for this? A very basic question. So this type of questions are huge, highly asked in the SSC, right? Staff Selection Commission. What is the answer? So again, this is a closed economy, so we are not allowing any country goods to enter into India, or we are not sending back our goods to other countries also. So answer is D. A very, very important question. This is asked in UPSC Civil Service way back in 2011. So this type of questions are asked in SSC as well. So briefly, we will also see the types of economy. Don't confuse with the classification of economy. The types of economy, we have market economy, non-market economy, mixed economy. Market economy means government control is not there. Completely left it to the private players like Reliance, Adanis, Ambanis. They can do business, they can earn whatever profit they want. There is a less amount of role for the government, right? So that is called as market economy. Non-market economy means completely under the hands of the government. So government controls everything, right? So that is called as non-market economy. Mixed economy means some role for the government, some role for the private company. So it is a balance for private companies and also the role of the government. Now, sectors of economy. You should not confuse with types of economy with sectors of economy. We have primary sector, secondary sector, tertiary, quaternary and quinary sector. So in these sectors, if you observe, primary sector includes the direct goods collected from the earth resources. Whatever earth directly gives, like mining is directly given by the earth itself, there is no processing and all. Farming, agriculture, fisheries, all these things are directly collected from the earth, right? So those are called as primary sector. Secondary sector, we process the goods, we collect these things, like for example, wheat is cultivated through agriculture. So that is a primary good. But if you process it to the bread, we made it to the bread. The wheat was collected and it processed to the bread. So second, if there is any process of raw material, the primary materials we are collecting, if any process on, that is called as the secondary sector. And tertiary sector, we have a service sector. There is no goods and goods produced. There is no physical goods. There is only service like hospitality, restaurants, hotels. All these are service sector. And quaternary, quaternary include research and development like ISRO, right? So any research and development, scientific, all those things include the quaternary sector. And we have one more called as quinary sector. Quinary and quaternary too, they may confuse you in the exam. Quaternary is for the research and development, scientific developments. And quinary means decision making, like the chairman of ISRO or the prime minister. Those are the people who are taking the decision for the country. So this includes the quinary sector, right? So this is about sectors of economy. Next question. Other things remain unchanged. So other things remain unchanged. There is no other external factors. Market demand for a good might increase. So there is a good in the market already. For example, a pen. For example, a pen is already in the market. So when will the demand for this pen increases? They are asking other factors remain unchanged. You only consider these four factors. When will the price of the good increase? I mean, whenever the demand for the good will increase. So they are asking you, when will the demand for this pen increases? So that's what they are asking. So first statement they have given is price of its substitute decreases. So if you are buying, substitute means if you are not using pen, you can go with the pencil. You can go with the pencil. So these are substitutes. If you are not using pen, then you can go for the pencil also. So they are saying that price of substitute decrease. So pencil cost is decreasing. Whenever there is a decrease in pencil cost, so the demand for pen increases, they are saying. No, that's wrong. If the pencil price is decreasing, will you shift to the pencil or will you demand for pen? You will demand for the pencil itself because it is a lesser cost. It is a cheaper cost. So that's why the demand for pencil increases and pen will decrease actually. So this statement is wrong. Price of its substitute decrease means pen demand will decrease because people will shift to pencil. So this is not satisfying. Price of its complement decreases. So we have two complements like a TV and remote or laptop we can take. Laptop and mouse. Laptop and mouse. So they are saying these are the two complementary. I mean, you can use them only in a combination manner. You cannot substitute. Both are required to work, right? So price of its complement decreases. Say for example, laptop price got decrease. Now the demand for this mouse will it increase or decrease? Price of its complement decrease. So laptop price has decreased, right? And mouse demand, what will there is a increase, because laptop is costlier and they are giving from 50,000, they are giving just 10,000 now. So people will rush to buy laptops, and also they need mouse. So of course, so this is a correct. So price of its complement decreases, then demand for that price, demand for this particular mouse will also increase. So second statement is correct answer. The good is inferior good and income of the consumer increases. So good is inferior means cheap quality good, 100 rupees t-shirt, and whenever there is an increase in your salary, will you buy that inferior good? No, you will not. You will go for the some costly one. So the demand for inferior goods will decrease. So this is also wrong. Its price increase. So they are saying that this pen, the cost of pen is increasing. So if the cost is increasing, we are not going to buy it. We are shifting to something else. So this is also wrong. Hence option B is correct. Next one, the national income of a country for a given period is. So if you solve the first question, we have solved the first question. If you are solving the first question correctly, if you understand the GDP correctly, then this is a very easy question. So you need to understand the total GDP means whatever the total amount we have added in the country in the 1 year. So that is called as GDP. This GDP is also called as the national income. Now they are directly asking the definition. What is GDP? We have discussed GDP. Go back if you haven't listen this GDP that we have discussed in the first question. Total value of goods and services produced by the nationals. No. In GDP, whatever the goods, whether foreigners or anyone producing within our boundaries, that will be considered as a GDP. So not nationals, but all the people who are residing in India. So this is a wrong. Sum of total consumption and investment in expenditure. So they are saying sum of total consumption and investment in the expenditure. But what about the savings? We need to take all the value added. So this is also wrong. Sum of personal income of all individuals, they are saying. This is also wrong, because we have a companies also which are legal entities. So this is excluded. So this is also wrong. Money value of final goods and services produced. This is the correct answer. Total goods and services that are produced in our economy, whatever in the total territory, whatever the total final goods and service produce the value, that is called as the GDP. So that is also called as national income. A very, very important. So even though we took some time, we were able to solve very conceptual questions. So first we have solved the total GDP. So that means we have discussed clearly how it is calculated, what is GDP, what is national product. We have seen factor cost, basic prices, market prices. We have discussed very well. So if you understood, you can solve these 3 questions very easy manner. All these 3 questions are from first chapter, that is national income accounting. A very, very important chapter, and we have solved 3 questions, which is a very good amount. Jahnavi, the answer is D, because it is not about nationals. As I said, it is about the territory. Please watch the first question video. You will understand a very clear manner, right? Next question. Which of the following is other name for the average income of a country? Average income of a country. Inflation rate, disposable income, per capita income, none of the above. Now tell me the answer. Which one of the following is another name for average income of a country? Average means what? The total income generated by the individuals. Total income, GDP for example, divided by the number of population of a country, right? So the total income of the country, you can take total income of the country divided by the number of individuals. So that is called as the per capita income. Very simple. Per capita is a meaning. So very direct question. Yes, very good. So Jahnavi has answered it as correct. So per capita income is also called as average income of a country, right? Next question. Now we are moving to the budget chapter. So first chapter we have completed. National income accounting, 4 questions we have solved. If you revise all the thing, it took around 25 minutes. You can able to answer any questions asked in the SSC examination, right? Next question, the first budget of independent India was prepared by. So after independence, we got 1947, India got the independence, right? So when was the first budget of independent India? Who has prepared that? R.K. Shanmugam Shetty, Morarji Desai, Jawaharlal Nehru, James Wilson. So who has done this? Anyone? Anyone got idea about this? R.K. Shanmugam Shetty, Morarji Desai, Jawaharlal Nehru, James Wilson. Okay, let's go back to the discussion of the budget. The total facts we will discuss about the budget, and then we will come back to this question. Okay, because that's what our intention is, to make you revise, not just reading the facts and leave it, right? So let's understand the budget, right? Budget means estimation of all the income as well as expenditure. For example, you are receiving from your parents 10,000 per month. That is an income of yours. And you also need to do expenditure for hostel fee, for books, for test series, whatever may be, right? So it is nothing but estimation or tallying of income received by the government and expenditure done by the government. That is called as the budget. Very basic definition. Now, what is the history of budget? India was under the Britishers' hands, you all know, right? So in the Britishers' time itself, the budget concept was derived. First introduced in the India on 7th April 1860 by the British Crown. So India was under the British Crown. That's why the budget was introduced by in the UK. They did not introduce in India. But for India, what to be the expenditure, what to be income, they have decided in the UK itself. So 1860 was the first year. You need to remember. Then first Indian budget, that means in India. This was put in the UK, but this first Indian budget was proposed by James Wilson in 1869. So Wilson was the one put the budget in India for the first time. But it is before independence, right? You keep an eye on that. After independence, the first budget was presented by R.K. Shanmugam Shetty on November 26, 1947. We got independence on August 15, 1947. So this was the first independent India budget, and that was proposed by R.K. Shanmugam Shetty. A very, very important one, right? Now, first budget of Republic of India. Republic means after the Constitution came into the picture. Our Constitution came into the picture on January 26, 1950. Right? So first Republic budget was put forward by John Mathai. All the names are very, very important. They will ask you in the exam. John Mathai was the first one of Republic India. Budget was proposed. Next, Deshmukh was the first Indian governor of the Reserve Bank of India to put forward the budget. So first Indian governor as well as the finance minister. Interim budget. Interim budget means the budget which is put forward in the election years. This year we got interim budget in 2021. So first interim budget when the first elections in India happened in 1951-52. So Mr. Deshmukh was the one, right? So Morarji Desai presented the highest number of budget in India. He put forward it 10 times. This will also be asked in the exam. Morarji Desai was the one who put forward the budget. 10 times is the highest by any finance minister. Now tell me the answer for this. Now tell me, the first independent India budget was put forwarded by. We have discussed, right? Just before we have discussed. So now try to answer it. So James Wilson can be eliminated, isn't it? Because this guy was put forward the budget before independence, when Britishers were ruling in India. So this can be eliminated. Jawaharlal Nehru nowhere came into the budget because he's a PM. He is not finance minister, right? So Jawaharlal Nehru can also be eliminated. That's how you need to eliminate the statements. Now Morarji Desai came way back, right? He is the prime minister way back after 1977, right? So 1979 he was the prime minister, and also before he acted as a finance minister as well, so he is not the one. So answer is R.K. Shanmugam Chetty. Yes, Jahnavi, you have answered it as correct, and we have discussed this very well. So these facts, all that we have discussed, is very, very important. There are also few more facts related to the budget that also we will see here. Railways was one of the most important during the Britishers. You all know the first railway was produced in 1853 between Mumbai Thane. After that, Britishers expanded railways because they want to exchange goods from one region to the other region. So as railways importance got increased, in 1921, Britishers has appointed a committee, Mitchell-Ackworth committee. This was asked many times in the SSC exam, right? So Mitchell-Ackworth was appointed, and he asked to have a separate railway budget. Ackworth report given to the British government. They said that we should not combine railway budget with the normal budget. We should have a different budget, right, for railways. So this committee recommendation was agreed, and in 1924, for the first time, railway budget was given separately from the normal budget, right? So railway budget was put forward by the railway minister separately. But in 2016, almost after 100 or 95 years, Bibek-Debroy committee was appointed by the government. By this time, after like 100 years, railways importance got decreased. And there was a lot of disputes between the states also, that we did not get any railway line, they got the railway line. So all the disputes, after seeing this, Bibek-Debroy committee said that railway budget, what the Britishers have separated in 1924, has to be merged, and there should be a single budget. So from 2017-18, there is a single budget. Now there is no railway budget as such from 2017 and 18, right? So this is about the railway budget as well. Now answer this question. Yes, Chakradhar, answer is A for previous question, but now answer this particular question. The first railway budget separately was presented in 1952, 1924, 2017, 1973. So what is the answer? We have just discussed. Try to answer it, right? So we are taking all the revision for you. Like there is a chance of coming questions. You can score high in the general studies paper and you can qualify, right? So what is the answer for this? We just discussed. If you see, in 1924, the first railway budget was presented. Right, Jahnavi, you are correct. So answer is B, 1924. Next question, corporate tax is a. What is the corporate tax? It is in 1924. Chakradhar and Jahnavi has answered it as correct, right? So corporate tax is a government expenditure, company's profit, revenue for the government, capital receipt of the government. So what is this? What is the answer for this? Anyone? Before explanation, try it. We will have a discussion on it, corporate tax, but try to answer it. Anyone? What is corporate tax? Okay, corporate means a private company. You all know, corporate means a private company. And any company who start their business in India, right? This is India, for example. They have to pay certain taxes on their profits. So for example, they got 100 crore, 10% of the profit. The company value is 1000 crore, but they got profit of 100 crore. So corporate tax is taxed on the profit earned by the company, right? So this is a 10% corporate tax, means it is paid to the government by the companies, right? So let's see. Is it a government expenditure? No, it is not a government expenditure, right? Government expenditure is something else. It is not. Company's profit? No. Not, corporate tax is not company's profit. It is the tax paid to the government. So revenue of the government. Yes, this is correct. Revenue means what government earning from the country. So corporate tax is paid by the companies to the government. So it is nothing but a revenue of the government. Capital receipt of the government. No, capital receipt. So if you see, answer is C. We have discussed this. Now if you see the components of the budget, there are two components, receipts and expenditure. You need to understand it. Blindly you cannot mug up these things, you will forget. Receipts means what government is receiving money in that 1 year. Government receiving from whatever the sources, all the things. And this can be also include debts. They might be taking debt also from some private companies or some by releasing bonds and all. So this receiving money, receipts, which consist of the one-time payments, what the government taxes and all. Along with that, we also have debt, where government is taking. So government does not have proper money, they are releasing some bonds and they are taking in terms of debt. So receipts consist of one-time payments, that is revenue, and also the debt. So if this is the receipts, this is the revenue. Small circle is the revenue, and these are all is the debt which government has taken, right? So receipts include revenue plus debt taken by the government in that 1 year, right? So that is the receipts. Fine. Now expenditure. So this is the money coming towards the government, whether one-time payments or debt. Now this is expenditure which government is giving money to someone else. So it can be one-time expenditure, it can be long-term expenditure as well. So if you see in the receipts, we have revenue receipts, as I said, the one-time payments. So government need not to pay back. It is like a tax collection and all. And also capital receipts. So this capital receipts include the debt. So they are taking the debt from the markets, right? So this is the capital receipts. And expenditure also, we have revenue expenditure like paying interests or paying salaries. So those are all wasteful expenditure. And capital expenditure means creating asset, like road, government is spending some money to create road, and this gives money every year in terms of road taxes and all, vehicle taxes, road taxes and all. So these two are a long term. This is a receiving money, this is a expenditure money. So revenue expenditure means one time payment. So this is the budget classification. You need to understand this as well. Right? So for previous question, as tax forms part of revenue, one time payment, government no need to pay back. That's why corporate tax is a revenue for the government. So Jahanavi, very good. So answer was correct as C. Next question. Which of the following is a direct tax? This is a very easy question. So answer this question. Which of the following is a direct tax? Goods and service tax, custom duty, capital gains tax, service tax. So what is the answer? Okay, let's discuss the concept. Direct taxes are those where individuals directly pay to the government. Directly pay to the government. For example, I am earning certain amount of salary, right? Now income tax, I will pay directly to the government itself. There is no intermediary to collect. Directly I am paying it to the government. They are deducting my salary from the beginning itself and it will directly go to the government. Whereas in terms of indirect tax, there is an intermediary. For example, I bought this phone from the market. Am I paying the tax on this phone directly to the government? No, I am paying it to the company who is selling this phone to me. I am paying to them and this company in turn is paying to the government, right? So in direct tax, I am directly paying it to the government. In indirect tax, like whatever the product and all, I am paying to the company and company is paying to the government, right? So that is the difference between the direct tax and indirect tax. Now if you see, now try to understand. They are asking which of the following is a direct tax they are asking. Are you paying GST directly to the government? You are buying this pen and there is a GST, for example 5%. Are you paying this directly to the government? No, you are not paying it. Goods and service tax can be eliminated. You are not paying GST directly to the government. You are paying it to the person who sold this. Now think, now try to answer this after understanding the discussion of direct or indirect taxes. Anyone? Custom duty. Custom duty means those goods entering into India. For example, this is India and some goods, watches for example, is coming from USA. And whenever they are entering into, when you want to buy, say for example, you want to buy watch from USA and it is entering into India, there will be a tax called as custom duty, whether while going out of border or coming inside of border. So you need to pay certain amount of taxes. Those are called as custom duties. Are you paying directly to the government? No, you are paying it to the company, and company is in turn paying to the Indian government. So this is also wrong. Service tax, no, you are not directly paying. You are paying to the hotels or whatever, and then they are in turn paying. Whereas capital gain tax, you are directly paying to the government. I'll explain you what is capital gain tax. For example, I have bought a land. In 2020 for 1 crore rupees. 1 crore rupees in 2020, I bought a 1 hectare land. In 2024, I am selling it for 3 crores to someone else. Inflation they will remove. So 3 crores. Do I get any profit or not? I bought it for 1 crore and now I am selling it for 3 crore. The market value has increased. So 2 crore I have got profit. That is capital gain. Capital means land here. Any asset is capital. So I am gaining 2 crore from this selling of this land. So for this 2 crore, I need to pay tax to the government. So this is directly paid to the government. That is called as capital gain tax. So Chakradhar, very good. So answer is C. Right? So answer is C. You can see direct taxes and indirect taxes list. You can also remember these things. Direct taxes are income tax, capital gains tax, security transaction tax, prerequisite tax, corporate tax, where companies directly paying to the government. Sales tax, GST, service tax, custom duties, excise duties, value addition. These are all the indirect taxes, are very, very important. Next one. Next question. Which of the following is one of the maturity periods of treasury bills? T-bills also called as treasury bills. So which one of the following is one of the maturity period? There is a fixed maturity period. Let me explain you T-bills. For example, Government of India, they want some 40 crores this year to give subsidy or to give services for the poor, all these things. But the budget they have is only 30 crore and they want is 40 crore. Please do respond for this question. They are having 30 crore, but their expenditure is 40 crore. So 10 crore difference is there. From where they will take this 10 crore? Someone please answer this question. From where they will take this 10 crore? Don't worry of getting right or wrong. Don't think like that. Learn the new things, because you are the students of engineering background, I understand. So there is a lot of technicalities. This is a little bit generalist, but yes, if you want to get a good score in the other exams also, you need to have a knowledge on this as well. So tell me, from where this 10 crores will government bring? Anyone? So here government will release some bonds. They will write on that bond that in the 30 days, for now you give us the 10 crore. After 30 days, we will pay you 1% interest. That means 10 crore plus 1%. So for example, 10%, let's say 11 crores we will pay after 1 month. Yes, very good, Jashwant. So bonds will be released because it is released by government. Governments will stay forever. Unlike the private companies and all, we don't trust, but government, yes, we do trust. So people will rush to buy because within 1 month they are going to get 1 crore profit. Because government does not have, they will take this 10 crore, they will try to generate some income. It is 30 days is an example, but yes, it will have a long term as well. So here 10 crores they will take now and they will invest somewhere else and they will get 12 crores and 1 crore they will pay back to the people who has bought the bonds, right? So they can bring from RBI also, but bringing from RBI is a not solution because that is free money. RBI itself is a government. RBI is under Ministry of Financial Services, the Department of Financial Services under Ministry of Finance. So even they don't have money also. They will buy from the market, companies, individuals. So that is how it works. So people also getting profit. The government is also getting money instantly. So these are called as T-bills, and these T-bills are nothing but a bonds. But these T-bills are usually considered less than 1 year. the maturity period is less than 1 year, then those are called T-bills. And if maturity period is more than 1 year, those are called as government securities or GSACs. T-bills are short term. So these T-bills are given for 91 days, 182 days and 364 days. So these are the 3 maturity periods government which is paying now. So among this, what one is there? Answer is D. We have 91 days, 182 days, 364. So we don't have any of these maturities. That's how you need to learn in a holistic manner. So answer is D, where info reader has answered it as correct. Very good. Next question. This is an application based question, but very common sense. You don't need to worry about knowing economics also. Very common sense. You can take your own daily life as an example and you can answer this question. There is a persistent deficit budget year after year. That means government is taking a lot of debt every year, right? Which actions following can be taken by the government to reduce the deficit? There are 4 measures given in the question. Which measure should government take to reduce their deficit? So now tell me, very common sense. Enhance revenue expenditure. So they are saying spend more. That is the condition. Next one, introduce new welfare schemes. So bring on new schemes and give money to the public. So this is the second option. Rationalize subsidies. So that means subsidies, whatever you are giving, fertilizers, food subsidies, reduce them. Rationalizing means wherever it is important, give them. Rest of all subsidies, cancel them. So that is the third option. Fourth option, reduce import duty. So whenever the goods are entering into India, reduce the prices on them, reduce the import duties, right? So that is the the fourth option. So tell me the answer now. Which measure should government take to reduce their deficit, to reduce their debt? Jashwant, understand, enhance revenue expenditure. Will increasing the expenditure reduce the government deficit? No, right? So it will increase more deficit. They will enlarge their differences. So this is not a good measure. Now second one, new welfare scheme. So if new welfare schemes are launched, government required again money, they need to give, so deficit again will widen. And reducing import duty. So if they, for example, they are getting 10% of import duty, 10 crore. Now if government reduces it to 5%, they will lose 5 crore. So government money is reducing. So this is also wrong. Rationalize subsidies means to whatever important there, you need to give subsidies, rest of the things you cancel. So they are saving here the money. So answer is C. Yes, Chakradhar and Jahnavi has answered it as correct. Very good. This is how the questions are framed in application based. Now we have a lot of factual questions. Application based questions are from selective topics. Rest of the things are all facts in economy. Goods and service tax in India was implemented from? From when did goods and service tax was introduced in India? Anyone? June 2018, July 2016, July 2017, June 2016. Yes, a very direct fact. It was introduced from the July 1st, 2017, right? So info reader has answered it as correct. So you can see the process also. First it was started way back in 2000 when Vajpayee was our prime minister. So it was first mooted in 2000, but after that it was cancelled, discussed, all these things happened. Finally, it was implemented from 2017. 2017 it was implemented. Yes, Sunil Chakradhar has also answered it as correct. Next one, FRBM Act, Fiscal Responsibility and Budget Management Act. FRBM Act 2003 was introduced with an aim of, what is the aim of FRBM Act 2003? Promoting tax collection for the government, constrain the role of RBI in auctioning government securities, improve the management of public funds, merger of government banks. So what is the answer for this? Fiscal Responsibility and Budget Management Act. If you know the full form also, you can get the answer. So you can eliminate. Fiscal here means fiscal meaning government management. Fiscal, right? So merger of banks is not related to the government, not related to that particular act. Now constrained RBI. No, fiscal means not RBI. It is not related to the government securities also. B is also eliminated. Promoting tax collection for government. No, this is also wrong. Answer is C. Improve management of public funds. Public funds means who? What is public funds? That means government funds itself. So fiscal responsibility, budget management is to manage the proper public funds. Government should not give freebies, vastly do the expenditures. They should optimally create infrastructure, collect the proper taxes. All these things should be properly managed. So answer is C. So most of you haven't answered. So answer is C. Here public funds means government funds, right? So that is the aim of FRBM Act. Next question. We will see some 3-4 questions on budget 2024. So that is also very important because it was released on February 1st. So the questions are possible. What is the revised estimate of fiscal deficit as percentage of the GDP in budget 2024? Now what is fiscal deficit? Understand this. Government in 2024, say for example, financial year means April 1 to March 31. So if the financial year 2024 means that April 1 2024 to March 31 2025, next year. So in this one financial year, how much extra funds you are taking as a debt? Whatever debt you created in 1 year is called as fiscal deficit. So as percentage of total GDP, Jashwant, why not B? Because this is not constraining the role of RBI. There is no such provision under FRBM Act. RBI can auction whenever government says. It is putting restriction on government, not on RBI. So there is no such. Yes, they may indirectly possible, but there is no such provision as such. But directly we have the appropriate answer to manage the funds properly by the government. So the option C is the most appropriate one, right? So in this one financial year, how much extra government is creating a debt? That is called as fiscal deficit. So how much is there as percentage of GDP? For example, our GDP is how much? Anyone? How many crores? Our GDP is around $3 billion. $3 billion, right? So this, they are saying how much fiscal deficit? Anyone? It is around 5.8%. So if you are producing 100 crores of GDP, out of that approximately 5.8 crore is what the debt that we are creating in our country. So you can see the map. This is directly copied from budget itself. So very important. So in a year, how much GDP we are producing? Out of it, how much is our fiscal deficit? How much is our debt? So they are asking about this year. So you can see here. This is the map. So blue color one is the fiscal deficit. Fiscal deficit. So 5.8% is our fiscal deficit. Right? Great. Next question, very factual. So you have to remember our fiscal deficit as percentage of GDP in budget 2024 is 5.8%. Next question, what is the highest source of revenue for the Indian government according to budget 2024? Income tax, goods and service tax, corporate tax, customs duty. Out of this, which one is the highest? Okay, let's see what government said in this year budget. they are getting money from these sources. Income tax 19%, the total revenue what government is getting 19%. Right? So 19% the total revenue that they are getting is from income tax. Then corporate tax, the tax from companies, right? That is 17%. From GST they are getting, where is GST? Oh yeah, 18% they are getting from GST, right? So income tax is the highest, then GST, then corporate tax. Along with that, they are also having other money, customs duties, union excise duties, very, very small. And borrowings and other liabilities means these are not revenue, but this is a debt of the government, which is not part of revenue. So you can eliminate that completely. So now tell me, what is the answer for this? We have seen, this is the rupee comes from, how much revenue is more coming for the government? Is it income tax or GST or corporate tax? So according to this budget, which one is the highest source for revenue for the government? Now tell me. We have just seen. Please do answer. Is it custom duties? No, it is just a 4%. So this can be eliminated. Corporate tax, yes, you may confuse, it is 17%. GST 18%. Income tax 19%. So answer is A, income tax. So we have just discussed it. Next question, one more budget question, this year budget. To which of the following ministries does the, yes, info reader, you are correct. To which of the following ministries does the highest amount was allocated in the budget 2024? So tell me, anyone have idea to which ministry the highest budget was allocated? Is it Ministry of Railways, Ministry of Defence, Ministry of Health or Ministry of Housing and Urban? You can see again the top three, at least you can remember. Ministry of Defence has the first rank, Ministry of Road Transport second, Ministry of Railways third rank. So top three you have to remember. Fine. Any answer? Ministry of Railways, Ministry of Defence, Ministry of Health, Ministry of Housing and Urban Development. So yes, we have seen Ministry of Defence, right? So the top three, second is road transport and then third is railways. Yes, Sanket has answered it as correct, and then Sai Jashwant also answered it as correct. Ministry of Defence, right? Next one, this is again a conceptual one. I will explain you. If at very basic, the questions will come like the difficult question most of people will leave. But if you know the concept, you can get an edge over other people, right? That's how you need to be high. You don't need to score all the questions, but you need to step ahead when compared to the other students. So the decrease in repo rate by the central bank here is nothing but RBI. So if there is a decrease in repo rate, what will happen? Increased costs on loans, reduced expenditure by the public, increased flow of money in the markets, reduced amount of loans taken by the private companies from international markets. Right, Jahnavi info reader has answered it as correct. Let me explain you repo rate, then we will come to this answer. So this is banks, the commercial banks, SBI, ICICI, all the banks. This is RBI. And to which someone have answered it as C. Let's see, we will discuss repo rate and then we will come to the question. From to which the banks will give loans, so they will give loans to the public or private companies, right? So banks, why they work? They work for profit. They want to collect money from public, like I will store 1 crore in the bank. They will give me 5% interest for saving, and they will give loan to these companies for 10%. So they will get a profit here. But if RBI gives more money, more interest So here public are paying 10% interest to the banks. If RBI gives 12%, will they give money to this public? They will give money to the RBI. So repo rate is nothing but interest rate which RBI will pay to the banks. Repo rate is the interest rate which RBI pay to the banks when these banks give money to the RBI. So RBI will tell that we have a bond, take this bond, 10 crore bond, and give, as of now for us, give 10 crore. In future, we will give you the interest rate of 10%. So 10 crore you are giving now, we will give 11 crore after few years. So banks will give money to the RBI and they will take the bond. They will keep this bond with them. After 1 year maturity period, okay, you said you will give 10% interest. Now take your bond and give me the 10% interest along with my 10 crore. So they will give 11 crore. So repo rate is the interest paid by RBI to the banks. Now tell me, if RBI increases the repo rate, the interest rate which it will give to the banks, will banks give money to the public or RBI? Right? So answer this question, what I have asked. If repo rate is increased, that means interest rate what RBI pays to the bank, they have increased it. Will banks pay money to the public more or give loans more to the public, or will it load in the RBI? Please do respond so that I will understand. This is a conceptual questions. Just put your comment, will they give to public or RBI when RBI is giving more interest? Just answer me, RBI or public. Which one? They will give the money to RBI because they are giving more interest. From public they are, yes, very good. Info reader and Sanket has answered it as correct. They will give money to the RBI. Now this is the market. RBI is not included in the market. Market means those who are freely trading the money, right? Yes, Jashwant Jahnavi have answered it as again correct. So this is called as market. Now what is happening, as repo rate RBI has increased, the money in the market from banks has entered into RBI. So the flow of money in the market has reduced. Here 100 crore money is there total with the banks. Now this money 10 crores they have given. So money flow in the market has reduced. Right, isn't it? Do you agree? Yeah. Now tell me the answer. The decrease in repo rate by the central bank. Now they have decreased the repo rate. The interest that banks are being paid by RBI, they have decreased. Now what will happen? Increased cost on loans, reduced expenditure by public, right? Reduced expenditure by the public, reduced flow of money into the market, reduced amount of loans taken by the private companies. Right? So this we have discussed the interest paid. If you have confusion, I will discuss again. So there may be, see, banks also need money. I am just quickly revising it. Maybe there may be confused. There are two things, repo rate and reverse repo rate. Repo rate and reverse repo rate. Try to listen carefully. You should answer this question, previous question. This is banks, this is RBI, this is public. This is very important because many times the questions are asked. This is all market. Now there are two things, repo rate and reverse repo rate. Reverse repo rate is which RBI here takes the bonds from banks. There are bonds, RBI take bonds and give money to the banks. So this interest rate paid by RBI to the banks is called as reverse repo rate. And banks also need money. Banks also need money because they don't have sufficient money to give loans. So what they will do, they want to take money from RBI. So here bonds are given to the RBI. So understand, whenever banks are needed money, when banks are needed money, they will give bonds to the RBI, whatever the bonds that are existing. They will take money and they will pay interest to the RBI, right? So that is called as a repo rate. The amount, maybe earlier we have discussed the reverse manner, so try to understand now once again. Whenever banks are lacking money, so banks will give bonds to the RBI and they take money, right? They take money from RBI. So that interest which banks has to pay to RBI is called as repo rate. And whenever RBI want to take back the money from the market, the interest rate paid by RBI to the banks is called as a reverse repo rate. So the interest which banks are paying to RBI is called as repo rate. The interest which RBI is paying to the banks is called as reverse repo rate. So now answer this question. Whenever there is a decrease in repo rate, that means RBI and banks. So banks are taking money from RBI when there is a less amount of money. Here reverse repo rate is reduced. So RBI is asking just give 1%, 2%. So banks will rush to RBI to take loans because they want to pay less interest, right? So there will be an increased flow of money in the market. Try to listen it once more. If you are confusing, just pause it or go back. Like for this particular question, I think first Sanket has already answered. So earlier we have wrongly discussed, I guess, but yes, now it was fine. So answer is C. Next question. Nationalization of banks in India took place in which year? Great. Yes. Inforeader, Jahnavi, both of you are correct. Now the next question, nationalization of banks in India took place in which year nationalization of banks took place? So I'll tell you the brief background. Earlier, before 1 year, one of such years, let's discuss the answer. There are many banks which are privatized. Almost all the banks were in private hands and they were giving loans indiscriminately. They were not giving loans to the poor people like agriculture loans and all. They are only giving to rich people. So it is becoming hectic for government because government also have no amount. So banks has to support poor people. So in these conditions, Indira Gandhi ji has nationalized. They have passed an act, Banking Nationalization Act, and said that all the banks that you are holding will become part of the government. We will pay money, of course. We will give the money, the market value to all of you, but all the banks will be now under the hands of government. So when it was done in 1969 during the prime ministerialship of Mrs. Indira Gandhi. So this is also important fact. Which prime minister has done that? Something like that they may ask. Next question, NABARD, National Bank for Agriculture and Rural Development, was found on in July 1982. So this was formed on the recommendation of which committee? Jahnavi and Inforeader has answered it as correct. Very good. Under which committee recommendation this was formed? Narsimham Committee, Gadgil Committee, Shivaraman Committee, Kasturi Rangan Committee. Anyone know this fact? So this was Kasturi Rangan, you can eliminate, this is related to the education. Gadgil Committee was first 5-year plan, this is also wrong. So it was formed on the recommendation of Shivaraman Committee. Shivaraman Committee. Kasturi Rangan Committee was recent education and then some environment report was also there. This was intentionally added by me, so this is not the answer. It was formed on the recommendation of Shivaraman Committee. NABARD is very, very important, right? So answer is C. Next question. According to the classification of non-performing assets, a substandard asset is categorized when its age is. So now let us explain about non-performing asset. For example, I am a person A and I have taken loan from the banks, right? So as I took loan of 1 lakh rupees, I have to pay the interest as well as some amount every month. For every month I need to pay. For example, house loan, I have taken 1 lakh home loan and I have to pay every month, right? So if I don't pay this on time, those are called as non-performing assets. Those are called as non-performing asset. So there is NPA, there is sub-classification. So you can see here, non-performing assets means delay in paying the loans that we have taken from bank. So if it is not paid, right, for 3 months consistently, for first month it is nothing they won't ask. Second month also they won't ask, and if third month also I am not paying, then it is called as non-performing asset. So 3 months time will be there. If I don't pay, it is called as non-performing asset. And if I don't pay till 1 year, up to 1 year, from 3 months till 1 year, I did not pay my home loan for 3 months to 12 months, that is less than 12 months. That is called as substandard asset. That is called as substandard asset. If I don't pay for more than 12 months, if I don't pay for more than 12 months, then it is classified as a doubtful asset. No, this person is going to not pay this anymore. So it is a doubt. So it is called as, if it is more than 1 year, doubtful asset. And it can be classified as loss asset when there is a non-recoverable. It was declared that this person is not going to pay anymore. It is a doubtful that he may or may not pay. But if the bank declared that this person is not going to pay, that is called as loss asset. So these 3 classifications are there in non-performing asset. So for the first 3 months, if that does not pay for 3 months, that is called as non-performing asset. And until 1 year, if that does not pay, it is called as substandard asset. And if more than 1 year and it was doubt for the bank that he may or may not pay, that is called as doubtful asset. And if they declared that he is not going to pay, so that is called as loss asset, right? Now tell me the answer for this question. According to the classification of non-performing asset, substandard asset is categorized when its age is. So they are directly asking what is the age of substandard asset. We have just discussed 12 to 24 months, less than 6 months, less than 12 months, more than 2 years. Now tell me the answer. We have just discussed. See, this is SMA means this is a systematized management asset. So it is like for 1 to 30 days. Within 3 months also we have a subclassification. We have as I said, until 3 months it is not classified as non-performing asset, right? Until 3 months, only completion of 3 months, that is called as non-performing asset. Before that, it is called as a stressed asset. If it is not paid for 1 to 30 days, for example, I need to pay on May 1, but I did not pay till June 1, that is called as system of management account of 0. SMA means 31 to 60 days, so I did not pay till July 1. Till July 1 I did not pay, that is called as SMA 1. Till 90 days, that means August 1 I did not pay, that is called as SMA 2. After that it will become a non-performing asset. After that, then only it will become non-performing asset. If you are paying with the proper regular intervals, there is normal asset. So stressed asset will become once the day you start after you did not pay on the date. Right? So I hope this is clear. And yes, for previous question, answer is less than 12 months. So Satyanarayana, Syed, Jahnavi, all 3 of you are correct. Yeah, so this is the classification. Next one, which one? This was asked in UPSC Civil Services 2019. Very simple question. But yes, this can be repeated in our SSC exam as well. Which of the following is not included in the asset of a commercial bank? Not included in the asset of a commercial bank. For example, I am a bank. I am having a bank B. I am giving loans to the people. Are they assets or my liabilities? Because this is my money, I am going to get return including the interest. So those are assets only. So loan advances means nothing but loans. So these are assets, not liabilities. So they are asking not included in the assets. So loans are assets only. So this is not the answer, because loans I am giving now. In future I will get including the interest. So I will get more. Those are my assets only, my money only. So advances are nothing but loans. They are not my assets. Now deposits. I am taking money from person C. I am taking money from person B and keeping as a savings. Is that my money? Is it my asset? It is a liability. I need to pay back. Whatever the amount that you need to pay back to your friend is your liability. Whatever the money that is yours own, so that is asset. So here deposits are the liabilities, what public put in the banks. They need to pay back whenever they ask. You have saved 10,000 and if you are going for ATM and taking money, they need to give you whenever you want. So it is nothing but the liability, right? So it is not part of the asset of the bank, right? So answer is deposits. Investments, nothing but bank investments in some other things. So for example, banks bought some bonds from RBI. So it is an asset only. In future they are going to get money. Call money is also short notice money, where one bank will give to other bank, specifically for other bank D. So this is also money asset only, of course, right? Is this clear? So answer is B. Deposits of the public with the banks are the not assets of the bank. They are assets of public and liabilities of this particular bank. Is this clear? Okay. Next one, which of the following is a feature of primary market? Which of the following is a feature of primary market? Understand, for example, I am having a company A and this is my 100%. I invested everything and I am having 100% share. Now, because of stress, I want to give my ownership to public 50%. So people who are involved in stock markets and all, they know. So 50% shares I will keep, 51 for example. 51% shares I have kept with me, 49% I am releasing it to the public. So they will put in the stock market. So whoever want to buy my share. So in future you will get the profit also. Whatever the shareholding you have, you will get the profit in future. So these are released into the stock market for the first time. So this is called as the primary market. Whenever for the first time my company shares I released into the market for public, those are called as primary market. Now this share was bought by person B. After 1 year, person B felt that I need money immediately. So what the person B will do? The person B will sell it to the person C. Now it becomes the secondary market. For the first time when company is released, that is the primary market. After that, everything is under the secondary market. So person B to person C, person D to person D. So it can change the hands, right? So that is the primary market. Now let's understand the difference between the primary market and secondary market. Then we will come back to the question. The sale of securities by new companies. Primary market means company releasing the shares for the first time. Those are called as the sale of securities of new company. Secondary market is already existing shares. From person B to person C to person D, it can change the hands. So those are existing shares. That is called as secondary market. The company sells securities directly to the investor. Person A, for the first time they bought it. So these are primary markets. And in secondary market, investors exchange ownership between themselves. There is no company involved. Company only involved in the primary market when they are first releasing their shares. The primary market only allows for purchase of securities. There is no selling. Primary market means company itself is allowing for purchase of securities. So there is no selling involved in the primary market, only purchase. First person will purchase from the company. But in other secondary market, both purchase and selling can be involved. Alright. Next, company's management decides of the prices. So what is the price of the share? 49% shares I am giving back. And what is the cost of 1% share? 10 crore, 1 crore, 3 crore, whatever. I decide the thing when I am releasing into the market. But yes, they release based on the market situation only, else public will not buy. And here prices are determined by the market based on the demand. If the company is performing well, the prices will increase. If the company is not performing well, they can release. So it is based on market, but here for the first time based on the company, right? So last one, it does not have any fixed geographic location. So primary market does not have any location, but secondary markets, yes, stock markets and all display all these things happens. Yes, initial public offering is part of primary marketing only. Very good, Jashwant. So initial public offering is nothing but it is part of primary market only, right? Now tell me the answer. Which of the following is a feature of primary market? Always remember the example. Company is giving the shares to the public for the first time. Existing shares are the only ones that can be traded. So they are saying that already existing shares can be traded. Do you think that trade is possible in primary market? No. So first option is eliminated. Prices are determined by the securities demand and supply. So in primary market it is decided by the company itself, not by the demand and supply. So this is also wrong. Stock exchange allows both the buying and selling of the securities. No. In primary market it is only buying. Company sells the securities directly to the investors. Yes. So this is correct. Right? So answer is D. Right. So this is about the primary market and secondary market. There is a question possible. Now we are coming to the last few questions related to the planning. This is factual in nature. If you know, you will know. Else you will not. So you have to learn the new thing. There is no concept to explain. 5-year plans, you all know, we have started in 1951 copied from Russia. For every 5 years we used to have plans, but it was stopped in 2017. Niti Aayog was formed in 2014, but last 5-year plan between 2012 and 2017 was stopped, completed. So what is the main objective of 12th 5-year plan? Yes, Jahnavi, Inforeader and Syed Alam, all three of you are correct. So this is a D. Faster, sustainable and more inclusive growth is the theme of 12th 5-year plan. Is the theme of 12th 5-year plan, right? So that is the fact. You need to remember this is a mere fact. Yes, Jahnavi, correct. Next one, which program given the slogan of Garibi Hatao? So Garibi Hatao, that means eradication of poverty, was the aim of which 5-year plan? Correct, Inforeader. Now answer this question. So which 5-year plan? It is of 5th 5-year plan. When Indira Gandhi ji was our Prime Minister, Garibi Hatao was the slogan. So I am giving you the crisp summary of the 5-year plans. First 5-year plan, second, third years you need to remember, and then objective of each of the 5-year plan. Very brief, crisp. This question, you will see 1 or 2 questions from this. So 5th 5-year plan, we have a removal of poverty or Garibi Hatao. We don't have any 5-year plan, Syed. We have replaced it with the 5-year plans was stopped in 2017. The 12th 5-year plan is the last. When the new government has formed in 2014, they have cancelled the 5-year plans program itself. We are now implementing through Niti Aayog. There is no 5-year plans, right? So it was stopped in 2017 was the last 5-year plan, that is 12th. Yes, Inforeader, Jahnavi has answered it as correct. So try to by heart these things. You can screenshot it on, so you can remember all these things, right? So whatever the objective, all these things. Fine. A very important, you can expect 1 question from it. Yes, very direct question what we have discussed just now. Planning Commission, which was implementing the 5-year plans, was replaced by. So Planning Commission was replaced by Niti Aayog, National Integration Council, Finance Commission, SEBI. So at least this, please answer this question. A very simple one, isn't it? Just now we discussed. Yes, so all of you have, some of you have answered it as correct. It is nothing but Niti Aayog has replaced the Planning Commission. Fine. Next, the last question. In the context of balance of payments, Yeah, so this is the last question. In the context of balance of payments, which of the following forms part of capital account? Which forms part of capital account? Let me explain you. This is India. Just assume, okay, the circle is India, and these are number of countries: USA, UK, China, Pakistan, Nepal, Bangladesh. There are 200 countries. So from India there are money going out, and from all these countries money is coming into India. So this is called as balance of payment. How much money is going out of India, how much amount of money coming inside India from all other countries. So we will tally. Do you think the money coming from outside of India is more or going out is more? So we will see. There is a two types of classification within balance of payments. Balance of payments means we have just seen the tallying the amount going out of India and coming inside India. So there are two things, two components. Current account means which is less than 1 year. Capital account means which is more than 1 year, long term money flowing. So imports and exports of goods and services are less than 1 year we calculate. So this is part of current account. Exports of imports, services as well, goods and services both are less than 1 year. Unilateral transfers, that means remittances. If some person has went to other country and then sending his money to his family. So this is nothing but unilateral transfers, remittances, which is also called as remittances. Income receipts and payments. So this is a government receive of interest payments if government is giving loans and all. Capital account, borrowings and lendings, what government has brought, or private companies, private banks also buy some, take some money from foreign companies and foreign people. Investments like FDI and FPI, foreign portfolio investments, who are doing investments in stock markets. FDI, who are investing companies into India. Change in foreign exchange reserve. So these are the capital account. Now the question is, in the context of balance of payments, which forms part of capital account they are saying. Capital account means longer period, more than 1 year. Imports of services, exports of goods, foreign investments, remittances. So now answer this question. So yes, import of services is a current account, less than 1 year. Import of goods also current account. Remittances also current account. So foreign investments are longer ones and hence they are part of capital account, right? So yes, Syed has answered it as correct, and then Jahnavi has answered it as correct even before explanation. Very good. So this is about today's revision session. So we have a test on 26th May. Right, if you are willing to test yourself with our ACE online, so please do take the test on 26th May from 1 PM to 3 PM, and it costs just 100 rupees. So do follow us and practice and get ready for your exam, right? So this is of the session for today. First, when some students were absent, try to revise those first chapter itself. We have discussed first 3-4 questions which are very, very important, conceptual in nature. Try to revise them and you will at least get one question, right? So this is of today's session. Please do like and share our videos if you like, and keep preparing, prepare well. Happy studies. Thank you.